Okay, in this lecture, we'll dive into a lot of examples so you can understand clearly how to use the exponential moving averages and how you can master this technique in a very short period of time. I know many traders and investors using moving averages, but only a few of them master how to use it properly. That's why I want you to watch this video very closely and take note on everything you learn here. Okay, now let's take the first example to better understand how the moving average crossover strategy works. As you can see on the screen, the blue line is the 9-day exponential moving average, the red line is the 20-day EMA, and the orange line is the EMA 50. Now, let's take a look at point A. When the blue line or the EMA 9 crossed below the red line or the EMA 20, and both lines started sloping down. This was a downtrend signal. As you can see on the chart, the price started dropping after the blue line crossed below the red line. And now I want you to take note of this. When the price drops below the orange line, or the EMA 50, we know that the downtrend signal is much stronger, and there's a high chance that the price will drop even further. You see, if you'd bought Tron, or TRX, at 750 Satoshi without a profitable strategy in mind, you might have lost half of your money in less than 2 months. And when the EMA 9 crossed above the EMA 20, both lines started sloping up. We have an uptrend signal here at point B. Similarly, when the price broke up through the EMA 50 and it continued to stay above this line, the uptrend signal was considered much stronger. As you can see, the price of this coin skyrocketed by over 200% in just 1.5 months. Now let's take another example. As you can see on the chart, the blue line crossed below the red line at point A, and both lines were sloping down. This tells us that this was a downtrend signal. The price was going to go down, and when the price dropped below the orange line, we know that this was a strong downtrend. You see, the price dropped by over 50% in about 2 months. This strategy tells us exactly when we need to sell our investments to protect our money before the price drops. And if you can master this technique, you can easily buy low when the trend reverses. The EMA 9 crossed above the EMA 20 at point B. Both lines started sloping up. We know that the trend had reversed, and the uptrend signal got stronger when the price stayed above the EMA 50. Okay, let's take another example. As you can see, the EMA 9 crossed above the EMA 20 at point A. Both lines were sloping up. The price was above the EMA 50, so we know that there was a strong uptrend signal. The trend reversed when the blue line crossed below the red line at point B, and the downtrend signal was stronger when the price dropped below the orange line. Now, I want you to take a quick note here. This strategy works perfectly well with the support and resistance strategy you've learned in the previous module. You see, we have a support level here at around 900 Satoshi. It helped push the price up many times. And when the price broke down through the support level, we might guess that the trend would reverse. When the price fell below the support level again, we knew that there would be a downtrend and the price was going to drop further. The old support level now became a new resistance level that prevented the price from rising up again. So in this case, we could confirm that this was a downtrend. The EMA 9 crossed above the EMA 20 at point C, and both lines were sloping up. This means the trend had reversed, and it was time to buy back the coin at a lower price. And when the price goes up, we'll make an easy profit. Okay, let's have a look at another example. Looking at point A, we have a downtrend signal here when the blue line crossed below the red line, and then the price fell below the EMA 9, EMA 20, and EMA 50. So we could consider this a strong downtrend. The trend reversed when the blue line crossed above the red line at point B, but this was a weak uptrend because the price failed to break up through the EMA 50. As you can see on the chart, the price fell below the orange line many times. So in cases like this, from my trading experience, I knew that the trend would likely reverse soon. Okay, here's a quick note. When you make a trade, besides identifying the uptrend signal that you've learned, I want you to keep 3 more important things in mind. For the uptrend signal to be stronger, in this case your risk will be lower, first we want the blue line or the EMA 9 to be above the red line or the EMA 20. And second, these two lines should be above the EMA 50 as well. And the uptrend signal will be much stronger when prices are above these moving averages. As you can see on the chart, the blue and red lines were below the EMA 50. In cases like this, the EMA 50 can act as a dynamic resistance that can prevent the price from going up. So to eliminate this circumstance, we want the EMA 9 and EMA 20 to be above the EMA 50. It was even worse when the price dropped below these moving averages, so we could guess that the price was going to drop soon. The trend reversed when the EMA 9 crossed below the EMA 20 at point C. As you may notice, the blue line was below the red line, and these lines were below the orange line as well, so we could consider this a stronger downtrend signal. The trend reversed when the blue line crossed above the red line here at point D. We also had a support level here at around $6,500, so we could easily predict that the price was going to go up soon. Again, for the sake of your money safety, you'll want to avoid some cases that the EMA acts as a dynamic resistance. So in this example, we would enter the trade when the price already broke above the EMA 50. Okay, another example. Now we have the EMA 9 crossing below the EMA 20 at point A. The orange line was above the red and blue lines, and the price fell below all of these moving averages. So we could predict that this was a strong downtrend. The price dropped by over 35% from 11,000 Satoshi to about 7,000 Satoshi. We had a resistance level here at around 10,500 Satoshi and a support level at around 7,000 Satoshi. So we could easily predict that when the price fell to the 7,000 mark, it would likely go back up again. As you can see, the trend reversed when the blue line crossed above the red line at point B. And because there was a resistance at 10,500 Satoshi, what I would do in this case is to sell my coins at around 10,200 Satoshi, or 3% below that resistance level. The price started to drop when it failed to break up through the resistance zone, so we could guess that the trend would reverse soon. We also have a support level here at about 9,000 Satoshi that helped push the price back up many times. But the price already fell below that support level. So in this case, we can predict that the price will likely drop to the 7,000 mark again and then bounce back up. So what we want to do now is to wait until the price hits the 7,000 mark and bounces back up. Then we'll buy the coin at a low price for sweet profits. Okay, let's have a look at another example. Now, let's analyze this chart quickly. Looking at point A, we had a downtrend signal here. The trend reversed when the blue line crossed above the red line at point B. We had a resistance level here at around 4,900 Satoshi. As you can see, the resistance level stopped the price from rising up many times, so we could guess that the trend would likely reverse soon. The price started to drop when the EMA 9 crossed below the EMA 20 at point C. When the price fell below the EMA 50 and EMA 50 was above the blue and red lines, we could consider this a strong downtrend. We have another resistance and support level here, so we can easily predict that the price will likely bounce between these support and resistance lines. In this example, what I want to do is to wait until the price hits the support level at around 4,100 Satoshi and bounces back. Then I'll buy the coin back at a low price for an easy profit. Okay, another example. We had an uptrend signal when the blue line crossed above the red line at point A. The uptrend signal was stronger when EMA 9 was above the EMA 20, and both lines were above the EMA 50, and the price was above all of these moving averages. As you can see on the chart, the price of Ethereum went up by about 25% from $660 to over $800 per coin. The trend reversed when the EMA 9 crossed below the EMA 20 at point B. The downtrend signal was stronger when the price dropped below the EMA 50. The price went back up again when the blue line crossed above the red line at point C, but this time, the orange line was above the blue and red lines. This was a weak uptrend signal because the EMA 50 could act as a dynamic resistance that prevented the price from rising up. In this case, you should avoid making a trade and wait for another signal. The trend reversed again when the EMA 9 crossed below the EMA 20 at point D. As you can see, we have a support level here at $695. So in this case, we can guess that the price will drop to $695 and then bounce back up. Okay, the last example. We had a downtrend signal here at point A, but the EMA 50 was below the blue and red lines, so we could consider this a weak downtrend signal. The EMA 50 could act as a dynamic support that stopped the price from falling down. We had another downtrend signal when the EMA 9 crossed below the EMA 20 again, but this time the EMA 50 was above the blue and red lines, so we could confirm that this was a valid downtrend. As you can see on the chart, we had a support level here at about $144, so you could easily predict that the previous downtrend would end soon. The price was going to drop and hit the support level a few times, and then bounce back up. The blue line also crossed above the red line at point C, so we could predict that the trend had reversed. The uptrend signal was stronger when the price went above all of the moving averages, and the EMA 9 and EMA 20 were above the EMA 50. The trend reversed when the blue line crossed below the red line at point D, and the downtrend signal was stronger when the price dropped below the EMA 50. So now you've already mastered how to use the exponential moving averages. I want to let you know that this simple technique is very powerful as you make a ton of money by just trading the signals. Buy when there's an uptrend signal and sell when there's a downtrend signal. Easy, right? And when the downtrend ends, it's time to buy back your coin at a much lower price and make a sweet and easy profit. In the next lecture, I'll teach you the second technique that you can use to determine market trends. And the most important thing is, that technique works perfectly well with what you've learned so far. So, see you in the next video.